Hi, hello, welcome to our podcast on break-even analysis. Today we'll be discussing break-even and target profit calculations. The group consists of Rihanna,
Juliet,
Mariam.
and Rose.
This podcast will analyse and investigate the key aspects of break-even analysis and target profit calculation. Within this report, it will outline the primary framework using theatrical context as well as verbal solutions of break-even analysis. It will also examine why and how these analysis tools are used and the benefit it can provide for overall organisation strategy, short-term cash flow and long-term finance health. Lastly, presenting a case study based on break-even analysis and a target profit. Aims and objectives. The aims are to outline and analyse the concept of break-even and target profit, use appropriate calculations to provide a solution to the case study. Objectives. What is the break-even analysis? What is target profit? Calculations for break-even and target profit, and to solve case studies.
What is break-even analysis? Break-even analysis is the study of the mathematical relationship between costs and sales revenue under a given set of assumptions regarding the firm's fixed costs and variable costs. This analysis is used to determine the number of products that must be sold at a given price to cover the costs in order to make profit. There are various advantages to this analysis. The following are listed. It gives insight to the level of risks involved when it comes to starting up a business. It gives a forecast to the effect of change in sale prices. It calculates the outcome and cost of productivity changes and profitability. It is a simple concept that can be processed by entrepreneurs as the formula is easily understood. Essential information can allow managers to make important decisions such as whether to go ahead with business proposals or not. There are also various disadvantages to this analysis. The following are listed. Inaccurate and incorrect statistics lead to wrong break-even forecasts. Break-even analysis can be difficult as firms sell more than one product. Break-even chart is only a planning utility, therefore it doesn't determine the actual outcome. The break-even chart only provides limited information. A break-even chart signifies a short-term relationship of cost and output and becomes outdated very quickly. The formula of break-even is simply calculated by dividing the total fixed costs to the contribution. Fixed costs over contribution equals break-even. In order to find contribution, you must find the selling price and take that away from average variable costs. This way, you'll find the contribution. The line graph used in break-even analysis estimates when the total sales revenue will equal total costs. The point where loss will end and profit will begin to accumulate. Usually, the number of units are plotted on a horizontal X axis and total sales dollars on vertical Y axis.
The next objective that we will discuss is what is target profit? Target profit is a calculation that comes from the budgeting process in financial management. It is used if a manager wants to achieve a desired amount of profit at the end of a period of time. In order to work this out, you will need to make an estimation of the existing business activities. Basic cost volume profit formulas are used to find out the sales volume, and figures such as these should be known before trying to produce the target profit. Sales profit per unit, variable cost per unit, total fixed cost, number of units sold, and the target profit that you wish to achieve. Here we show the calculation for target profit. The formula for finding the target profit is fixed costs plus target profit divided by contribution. For example, if you wanted to make a profit of 50,000, how many units would you need to sell? This is the type of scenario that you would need that would cause a manager to carry out a target profit calculation. Once you've already calculated the break-even, you then decide how much profit you want to make overall and how many units you'll need to achieve the target profit. Target profit is beneficial for short-term cash flow planning, as well as reporting expected returns from lenders and investors. However, if there is an unfavorable variation between the target profit and the actual profit, it is important to re-examine the target profit again and make a more appropriate and realistic target profit.
So now I'm going to talk you through two examples of how to find the break-even and the target profit. For example, a company sells tickets for an ice hockey game. Selling price is £12, the variable cost is £2, the fixed cost is £20, and the target profit is 7,500. Sorry, the fixed cost is £20,000. So the question is, what are the break-even sales? So, as discussed previously, in order to find the break-even, you must find the contribution. And in order to find the contribution, we would do the selling price minus the variable cost. So £12 minus £2, which will give you £10. Therefore, you would then do the fixed cost, which is £20,000, divided by the £10. And that would equal to, you would divide it, so that would equal to £2,000. Therefore, the break-even sales is £2,000. Now, in order to find the target profit, you would do the fixed cost plus the target profit, which is 7,500, and then divided by the contribution found earlier. Therefore, the answer would be 2,750. Let's check if that's right. Here is a breakdown of how I got the figures. So the break-even, the contribution, and then this is the break-even, and then the target profit. Example number 2. K Events are working on the budget for next summer ball. Their ticket price is £15, the average variable cost is £5, and the fixed cost is £5,000, and target profit £1,000. So again, we're going to do the same thing in order to find how many tickets are needed to be sold to break even. To start off with, again, we're going to work out the contribution, which in this case would be the ticket price minus the average variable cost, so £15 minus £5, which gives you £10. And then in order to find the break even now, you would do 5,000, so the fixed cost, divided by the contribution, which was found, and which is £10, and that would equal to 500 tickets. Now it says how many tickets need to be sold to reach a target profit. For this one, again, you would do the fixed cost, which is 5,000, you plus the target profit of 1,000 and divided by the contribution, which equals to 600 tickets. I'm just going to go to next slide and check if that's the right or a breakdown. So again, this is a breakdown of how I got the figures and how I worked it out. So this is the case study that we came up with. I'm just going to read it. It says, Jennifer Peters owns Jenny Wedding Boutique, a successful wedding shoe shop located near a large shopping centre in Birmingham. She has created a good status since the grand opening 2 years ago. Due to a lot of client recommendation, She offers excellent customer service, custom personalization at affordable prices. Her business plan is based upon the following data. So, the selling price per pair is £95. The variable cost per pair is £45. And then the fixed cost is £85,000. So the question is to calculate the monthly break even. And in order to do this, once again, as explained in the two examples shown, we will do, obviously first you have to find the contribution. The contribution is the selling price, which is £95, minus the variable cost of £45, which gives you a total of £50. So the contribution is 50 basically. So then we move on so we can identify the break even. And to do this, we'll do the fixed cost, so 85,000 divided by the contribution that we found, which was 50. And the answer to this is 1,700. Question number 2 asked the target, well basically how many pairs of shoes need to be sold in order to find the target profit of £10,000. So in this case, you would again do the fixed cost, which is 85,000, plus the target profit, which is 10,000, and then divided by the contribution of 50. Once you calculate this, it gives you a total of 1,900 pairs of shoes. Therefore, how many pairs of shoes that need to be sold in order to make £10,000 profit is 1,900 pairs of shoes. I'm just going to show you the solution. So this is the solution of how I calculated everything.
This report has successfully investigated the key aspects of break-even and target profit calculations. If we go back to the beginning, we set some aims and objectives to analyze the concept of break-even and target profit, and to use the appropriate calculations to provide the solution to the case study. So far, we have realized that break-even is the point in which a business venture, the profits are equal to the cost. And we also found out that target profit is the target profit calculation is a useful tool to use to reach the desired amount of profit, which is helpful for budgeting and also aiming higher. So last of all, we found out that Jenny's Wedding Boutique requires 1,900 pairs of shoes to break even. They can also use SMART targets for the company to work towards. Thank you for listening.